Hello traders, this is Igor from FX Igor YouTube channel, and today we're talking about two very common trading patterns, and we'll talk about a little bit about statistics and probability in trading and everything. And I think that these patterns can be interesting for you. So ascending triangle versus rising wedge. So let me start with our analysis. The ascending triangle pattern represents a rising trend pattern that implies a flat top with the higher lows and shows the beginning of the bullish trend. As you can see on the right side of the screen, there is an ascending triangle picture, and we have a bullish trend with a green line, and after that we have few waves, bullish, bearish, etc., etc. And after that, when price breaks important strong resistance, we can see the new highs. This ascending triangle pattern is one of the most used patterns in trading, and a lot of traders do not know that, because even the big corporations and the big institutional traders, when they see that the strong resistance is broken, usually they make a buy trade. This is especially important when we trade a major Forex pairs and we trade stocks. We have a strong resistance for some stock and you broke that resistance. Usually traders create a buy trade. So they buy a high price. Not always, but usually they buy a high price in the moment when you break just a strong resistance. On the other side, on the left side of your screen, you see the rising wedge pattern. The rising wedge pattern represents a bearish continuation pattern formed after the rising correction. So this is the similar situation. You have a downtrend, and then you have a rising trend correction. It's with waves, up, down, and then you just break a strong support. That strong support can be a flat line, like support line, but sometimes can be the trend line. And if you broke that trend line, very strong trend line, you have a strong downtrend movement. And this is two patterns that we can see very, very often in trading. I can open a MetaTrader platform, any kind of platform, and show a lot of these examples, but we have every single day, strong resistance, strong support, or strong trend line breakout, and then a strong trend after that. But I know why this video is important. There's latest statistics that we gather in our proprietary software, and the same statistic that you can check. So you can check that statistics, and I will show the table. This is the table of some patterns and percentage of the correct size that the patterns can provide. And as you can see, the ascending triangle pattern usually can achieve a 73% of success rate. Just one thing to explain, and this is the very, very important. In the moment when we figure out strong support or strong resistance or strong trend line breakout, and we start to measure success rate of the pattern, our risk reward ratio is not 1-to-1. Usually risk is bigger than target. Because of that, we have so good percentage. In reality, if you are a trader, you will see that if you risk $1 and try to achieve $1, this kind of strategy will have 55, 56, 58, up to 60% of success rate, but it's different for every single asset. It's not same for all assets. And this is the beautiful result, excellent result. I know that a lot of traders on the YouTube channels, they think, oh, there is a strategy 80%, 90% on the right side with a huge winning ratio, etc., etc. But like I said before, the most important thing in trading, when you ask a question, if I risk $1 and I want to achieve target $1, what is the winning ratio? And if you calculate in that way, you will see that the percentage is always between 50 and 60% for good systems and strategies. And falling wedge, as you can see, the percentage rate is a little bit worse, 68%. But the reason is not because the strategy is bad or is not as good for bullish trend. It's opposite, because some assets, the stocks for most, and some major forex pair that depends on the US dollar in the last 1 year, etc. There most of the time some trend, usually stocks in bullish trend. There's more days and more patterns, winning patterns than losing patterns, because the stocks during the time usually going up, and because of that we have so good results in this way, in this testing. But I said, as before, if you risk $1, trying to achieve $1, it's between 50 and 60% success ratio. And on the end, what I want to say this short video, that you can use Autochartist to check all this pattern and to see success rates and maybe to open and close trades. I know a lot of traders think, oh, I need to pay, this is the expensive. You can get for free. If you want to get for free Autochartist, you will have a link just below this video. Go there, register, and the broker will allow you to use Autochartist and Trading Center signals for free. So you will get the free signals if you open an account and become a trader. So it's a beautiful news. I will just put the link just below this description so you can check. There are a lot of patterns like head and shoulders, like other patterns that have very, very good winning percentage, and traders like to use that patterns. You can, for example, in Autochartist set to get an email when some chart pattern form, and you will get real email. For example, if on a 4-hour chart or daily chart you have a ascending triangle bullish pattern, you will get email and you can enter into trade or check on the chart, and it's very good for all kind of traders to use such a service, and you can use it for free. So this is it. I wish you a great day, and bye bye.